Hello, everyone. On behalf of the World Bank Group, I'd like to thank all of you, both here in Washington and around the world watching online, for joining our event today, Decoding Debt, Getting Transparency Right. We're very excited to have such an esteemed panel here with us today, and we'll be getting started in just a moment. Before we begin, I'd like to encourage everyone to please join the online conversation around this event by visiting live.worldbank.org or by using the hashtag #DebtForDev on Twitter. With that, I'd like to hand things over to our host and moderator for today's session, World Bank Group President David Malpass.
Thank you very much, Erin, and thanks everyone for coming. Let's kick off. I want to welcome our distinguished panelists. Zainab Ahmed is Nigeria's Minister of Finance, Budget, and National Planning. Dr. Ken Rogoff, Professor of Economics and Public Policy at Harvard. Kenneth co-authored a book entitled This Time is Different, 8 Centuries of Financial Folly. Antoinette Saya is a distinguished visiting fellow at the Center for Global Development. She's co-chair of the World Bank's 19th IDA replenishment effort, which you'll be hearing a lot about this week. Antoinette is also the former Minister of Finance in post-conflict Liberia, which she led through the clearance of its long-standing multilateral debt. And Julie Monaco is Managing Director and Global Head of Citibank's Public Sector Group. Julie leads the team that is responsible for providing financial services to the public sector entities in 160 countries. So I've got a scene setter here, but I really want to get to our panel. So I'll give my thoughts on the opening. As we look at debt, and we're talking about transparency of debt, we're also talking about development and the need for debt. So we have to have this kind of dual hat in mind, that we would like countries to be able to have debt that is constructive. Some of it will be sovereign debt, some of it will be private sector debt, and it's critical to the development process of the country. And so my goal in this process is seeing debt used in reasonable ways by countries, and with transparency being an important part of it, because that helps establish the relationship between the government of a country and the people of a country, so that there's an understanding of what the debt is, what did it achieve, what were the goals of the debt, and the global process that can help with that. So with that, I can turn in, and I'll begin with Zainab. With regard to Nigeria, Nigeria's made progress on the transparency of some of the debt, but I wanted to get your reaction of where you stand in the debt transparency process and whether it's useful. How is it useful for Nigeria in its development process?
So a couple of years ago, good morning everyone, we set up a debt management office by law. And the Debt Management Office, on a quarterly basis, releases reports on all debts that the country has taken. We also have this being done driven by data. The Debt Management Office does a biannual debt sustainability analysis. That also is in the public domain. So if you visit the website of the DMO, you'll find quarterly reports, you'll find debt sustainability reports. The Debt Management Office has also been working very closely with the states to help the states increase the transparency of their debts, to the extent that now for any state to borrow, they have to have clearance from the Debt Management Office. So we analyze also the debts portfolio of the states to make an assessment as to whether they can borrow or not. What it has done for us is it's helped us to increase the transparency of debt management, so there's data that is now in the public domain that anybody can visit and interrogate. It's also been useful for both local as well as international investors, because it helps to drive decision-making process. And also we've seen most of the credit agencies that we interface is using the data from the Debt Management Office.
And how do you handle the debt of state-owned enterprises within that framework? Are they all, you said states in Nigeria have to get have to get permission or have a process to take on more debt, right? Is that true of state-owned enterprises?
Of some of the state-owned enterprises, not all. So we're currently in the process of making sure we bring all of them, because we recognize the fact that unless we have all the SOE's debts, then the information is not complete. But we have the major ones already showing, and even on their own individual reports also, they publicize their debt sizes.
One thing we're working on and working with the IMF on too is a recognition that state-owned enterprise debt, especially if it's guaranteed either explicitly or implicitly, is very similar to sovereign debt and needs to have the transparency that's built into it.
So all the debts that the federal government guarantees is included in the debt profile of the federal government. Mm-hmm. So except the ones that are not guaranteed by the sovereign, those are the ones that we're now also trying to pull together and disclose.
Uh-huh.
Yes.
Very, very good. Can any big thoughts?
Well,
I know you have lots of big thoughts.
Transparency is clearly like motherhood and apple pie and these kind of things, but debt is a very sensitive topic. And the IMF and the World Bank now have made quantum improvements in the reporting of debt statistics. There's much to be done, but it's just, night and day from maybe even 7 or 8 years ago. And in fact, you mentioned my book with Carmen Reinhardt. When we wrote that, the IMF and the World Bank were not publishing historical public debt data. I mean, just plain vanilla public debt data. And I still don't know to this day why. I mean, you could get it for a year or two, but they didn't have the historical data. And I think because it was so sensitive, it would constantly be changing. That has completely changed. If I might say, the big action now in the debate on transparency of public debt is China. China has become a major creditor to the rest of the world, and they have their reasons and their relationships with the World Bank and the IMF. I don't want to judge it, but especially with IDA resources not growing, and China has poured money into Africa and parts of Asia like we haven't seen since the United States after World War II. And not only, my co-author Carmen Reinhardt has written about this recently and estimates about half of the lending's invisible. The terms are not known, whether some of it, for example, we see in Venezuela, they collateralize sovereign debt against private company revenues. So, and needless to say, the World Bank is very, puts a big weight on corruption and principles of how you borrow. And I think the big picture thing in the world today is coming to terms between the other advanced economies in China on how to coordinate, because they're not part of the Paris Club. So I'll stop there, but I think that's really the big issue today.
No, that was interesting, and I do think there is this inherent in this topic of transparency is governments or some government officials that may not want transparency, in that if there are certain terms in the contract, maybe it can be either done more in the way that minister wants the contract. And so there's inherent in this topic a bit of difference of view of the incentive structure that goes on. With regard to China, we work closely with them, and I think they see that there are benefits from sound lending practices, and so we can work on what does that actually mean in terms of transparency. For example, if you've been used to putting in a non-disclosure clause into a contract, that makes it harder to have the transparency that people have agreed to go on. And you mentioned the Paris Club that they're not a member of. So those are some of the directions that we can think to go in terms of transparency. But a lot of it comes from the country itself wanting to have information published or being able to do it on state-owned enterprises. For example, that's not an easy task in some of the countries. Antoinette, tell us about either the Liberia experience or your more general experience. You've worked in lots of countries, so what do you think?
Yeah, well, good morning, everyone, and it's a real pleasure to join this very important panel. Maybe I'll start with Liberia, of course, a country devastated by conflict, inherited a very bad governance record before the conflict and then right after with the transitional government. And of course, all data completely destroyed, debt data in particular, very difficult to come by with confidence. So transparency overall, but debt transparency, a big issue for us, especially in the context of debt relief being a huge priority that we had and that the public was very focused on, actually. And at the time, we had inherited something called the Governance, Economic, and Management Assistance Program, which was a program imposed on the transitional government by donors seeking to address the bad governance record. And that was done just before we took office. And a very intrusive program, co-signatory authority given to experts in key ministries and agencies, but one that we welcomed and we eventually owned, seeing it as very helpful to the objectives we wanted to achieve. And of course, a better governance record was hugely important for HIPIC debt relief. And so we very much wanted to work towards that. And so GMAP, as we called it, certainly helped us to do that with strong leadership from the government side. President Sirleaf co-chaired bi-weekly meetings with donors, civil society representatives, key government ministers, including myself, looking across the reform program on a bi-weekly basis and making decisions about it. Very helpful and very good practice for us. We also, of course, in the Ministry of Finance, very much wanting to find tools to keep ourselves accountable. Despite our very weak capacity, we're very conscious and worked very hard to produce quarterly reports on the budget execution that the public looked forward to. And risky in a way, because our data was very soft sometimes, and there were risk of putting out data sometimes that would then be revised, and that led to all sorts of discussions, of course, as you can imagine, in that heated environment we lived in. But we thought it was still important to start doing that. And then debt data on the whole reconciliation process to estimate debt relief required, hugely important, so we really wanted to work on data issues to make sure that we got that right with the assistance of our creditors, of course, bilateral and multilaterals. And we had very good financial advisors working on reconciling the commercial debt. And Liberia had a third of our debt was commercial debt. And finally, we had to be transparent about meeting the requirement of not borrowing at all, even on concessional terms, in those years before the HIPIC completion point, to demonstrate that we were actually not borrowing. So transparency across the board is hugely important for us. Yeah.
Yeah, so a key point is engagement of the government in making it work. And then I keep thinking that important in this is that we keep our eye on, so good development outcome is the ultimate goal. And so people understanding, and I think the system evolving so that the countries that are transparent have a better chance at getting good investment, the investment that they want. And so making that connection, I think there was maybe a point where countries could say, well, if I'm non-transparent, I can get more debt and more activity, but then that leaves the next government in a bad situation. So we've got to establish, or I think people have to believe that with government engagement in the long term, you're going to get better sustainable development. Julie, how's it work from the private sector perspective?
Well, at Citi, we are the #1 underwriter of emerging market sovereign debt. So it's a business that is, very core to what we do, and we have an extensive sovereign advisory business. And so debt sustainability is what we spend a lot of time advising many government clients on. And so we've been very active and engaged and very supportive of the progress that you talked about in terms of the IMF and the World Bank over the last couple of years as it relates to more transparency around debt, because we think that that drives benefits. More recently been involved in the working group at the IIF for the debt transparency principles, which we think are really important because from a creditor's perspective, debt transparency is going to drive fiscal discipline, it's going to drive good governance, it's going to drive ethical behavior both on the creditor side as well as the receiver of it, and it will help fight corruption, and hopefully we won't have situations like Malaysia and things like that that continue to happen, right? So we agree, we got very much behind the IIF principles for transparency because we believe we still haven't done enough. There's more to do in terms of transparency. And if we get more transparency, it is going to be better for the creditors from a standpoint that we have better comparability. Right? When we're constantly trying to help governments when we advise them about debt sustainability, we're doing comparability. It's hard to do comparability if there's the ability to hide certain aspects. And so the IIF debt transparency principles really focus on putting a spotlight on those transactions that are not transparent today, whether that's asset-backed transactions, derivatives, private placements, all the things that don't have the same transparency as the bonds do. And we just think that there'll be more market discipline, and it will be better for the governments, it'll be better for the creditors and the investors if we move in this direction.
Let's talk for a minute about collateral and liens as a government. So I can imagine a situation where a government wants to borrow and they can get a lower yield if they offer collateral for the borrowing. Is that a good idea? Is there a way that sovereigns can do that? I don't know. Does Nigeria offer collateral on some of its sovereign borrowing?
Not really, but some of the government-owned enterprises, like the National Oil Company, does do that. They offer collateral. Sometimes it's in crude. A lot of times it's in crude. And it helps to reduce the cost of borrowing. And we think that's also good practice.
And so there's a connection, a direct connection, though, between the debt and the collateral.
Yes.
So one of the issues is if you're offering collateral that's far afield from the debt, you lose track of what the two are. Ken, any comments?
Well, first I wanted to say your point about the state-owned enterprises is absolutely key. Certainly in looking at financial crises, the state-owned enterprises often pours onto the books, but it's not just their debt. During, say, the year or two run-up, we saw this in Greece and other places, they use the state-owned enterprises, they delay payments to them, they have them make payments sooner, all these accounting gimmicks to try to cover up what's going on. I think the collateral issue is extremely problematic at the moment, and again, you said if it's close to where the debt is, if it's an oil company borrowing and they're investing in a field and it's the oil from that field, but as opposed to the tax revenue on the oil from that field, I mean, that's one thing. But we've seen in Venezuela that it at least appears that the collateral is often very remote from where the loan's being made. And I think this is an area where transparency is profoundly important. It just wouldn't happen if it were more transparent.
I'll come back to Antoinette, but Julie, do you have a comment? So can you give us any examples of Citibank sovereign loans that are collateralized?
There's times when governments are in stress situations and they don't have access to the capital markets, and there's opportunities for there to be collateral, whether it's oil, whether it's gold reserves, and other ways that they can collateralize. And so I think there's a purpose, and I do agree that sometimes it can reduce the cost of lending for a sovereign that's in a stress situation. But there has to be transparency around it, right? And so that is one of the transactions that's covered under the IIF principles, that those transactions, which aren't as as transparent today. And that's why IAF is proposing that all of these transactions be put into a database, be housed somewhere, maybe the World Bank somewhere, where they can be published, and and can be published right away. So I don't think there's anything inherently wrong with governments using collateral. In certain situations, it makes sense. But I do think that there should be transparency around it.
I'm trying to put people on the spot. So
Yeah.
Zainab, you mentioned some state-owned enterprises may give collateral. Is it transparent what the collateral side of the deal is? Within your data now, is there transparency on the collateral side?
No, on the data that we publish now, no, not yet. But like I said, we're trying to also update our data on state-owned enterprises debts, and we're in the process of collating that. And because it's good practice, where collateral is provided, except for the National Oil Company, because that is really public, but the others, not yet.
Yeah, so we're working hard. We have a number of work streams where we're trying to get at the core of this. Where is it published? Where is it available? Is it disclosed properly? Are we really seeing the terms? Because it gets pretty complicated in what the collateral is, what the price of the collateral is if it's taken by the creditor. Antoinette, comments in general?
Yeah, no, I agree with Ken that collateralization can be very problematic. And I think about the Republic of Congo's situation when they were in practical debt distress and trying to restructure their debt. And
This was bauxite or what?
Oil.
Yep.
Yeah. That was a big debt surprise for everybody, the size of the collateralized debt in Congo, and having to deal with it with multiple creditors, and it being part of what you had to restructure with very little information that had been available on it previously. So maybe in the SOE specific context is one matter to be close to what you're collateralizing for. But as a lien on public revenues for the future, with several creditors also involved potentially in a restructuring, it can be very problematic. Yeah.
And so is it a possible principle to say that sovereigns themselves should not be borrowing with liens? I mean, that's a pretty big step.
I would just say that the terms have to be transparent, because then I think the market will implore some discipline, right? Because if you have a situation where someone is maybe collateralizing, they're using their gold reserves, right, to get liquidity in a stress situation. Well, what's the terms of that?
Right.
What kind of, is it, did you take a haircut on where the gold is today? Have you stress test where you think, how much liquidity are they, or how much are they taking? Are they borrowing against that particular asset, and what are the terms? And I think if that is transparent, you're going to have a lot more people eyes on it. It will be in the spotlight to say, are those terms reasonable? Will the market accept that was a reasonable thing to do? And were those conditions the right conditions? I think when the conditions are not made public, that's when potentially you might have a transaction that is completely off market, is potentially putting the sovereign into a bad situation, where maybe maybe it was not. It was either unethical in terms of the way it was structured, or it was ethical, but it was just not realistic, right? And I think that's what the transparency will do if all those transactions are forced to really make clear what the terms are.
Ken?
Yeah, I would just say I agree with all that, but there's a tricky question of sometimes the loans made to a country which say, let's say their primary revenue was from bauxite, and you thought that was the tax revenues on that were what behind your loan, and then you find out, oh no, they can borrow on top of that and collateralize the one thing that you counted on. That's obviously going to make it very difficult to borrow in the future. In a way, it's a form of default, because there's been this long tradition of not doing that, of having I'm not a lawyer, but these pari passu clauses. So it's an emergency measure, but it absolutely is a form of default on your other lenders.
One thing I I think about is the difficulty as a government borrows, it has a different discount rate, if you think about it that way, than the people, in that the government's in for a temporary period of time, and so there's quite a bit of value to getting quick benefits from the borrowing, and so we've seen a situation where if you're offered a road that's going to be built in the next 2 years, that's worth lots more than the product that you're going to ship over the succeeding period of time. So how do we get incentives aligned for governments to have the borrowing incentives that are similar to the long run? The people care about development over the next 10 years or 20 years or 30. The government wants the results right now. How do we line that
Let me
up?
just quickly say,
Yeah.
this isn't unique to emerging markets or developing countries. We have this in every advanced economy in the United States, where if may I loosely say, if the Democrats are in power, they want to increase the size of government spending. If the Republicans are in power, they want to cut the size of taxes. Every government faces this kind of tension that they might not be in power in the future, that their discount rate is different. And it takes very strong institutions to try to push back against that.
Zainab, is that an issue? How do you get enough impetus within the government to do the hard things when the government wants results in the short run?
Well, in terms of borrowing, we just make sure that the borrowing we're doing is open, is transparent. In Nigeria, we cannot borrow any amount without the approval of the parliament. So to begin with, we have to disclose that this is what we're going to do, this is where we're borrowing from, and these are the possible rates that we'll get. And the parliament process is also an open one. So we just try to be as transparent as possible as far as the sovereign borrowing is concerned. We do have some challenges relating to being able to assess the debts that we owe to creditors, local creditors, and we're working to put that together. We've started a process.
Lots of countries have that.
Yes.
Did you actually borrow it or not? That's a starting
okay, so
point.
services provided to government, goods services provided to government are not paid.
Yep.
So we're now issuing promissory notes to creditors, and even that process also is disclosed. So it's fully open. You know who the creditors are. You know what the cost is going to be for government. You know what the tenor of those notes are going to be, and these notes are discountable. So it's also goes through parliament approval. Yeah.
That sounds like a good step. Antoinette, thoughts?
Yeah, no, I think the legal framework can be helpful in of course, encouraging governments to be more transparent and forcing and requiring them to be more transparent. But it's one thing to have a very well-formulated public financial management law passed by Parliament, supposed to be in effect, and it's another thing to actually abide by it. And we see in a number of countries very good progress in putting together laws and having them govern, in theory, the contraction of debt. But I look at my own country and the experience in the last year and a half of trying to contract very ruinously expensive debt, as you say, with a view to getting, in this case, roads done quickly, and roads that had not been properly assessed at all, but wanting to sign very quickly and to prove that new administration, new government is now more serious about road construction than their predecessors had been. And the public financial management law was there, but completely ignored. And contracts signed that in the process of now being canceled. So it's not enough just to have laws. It's, I think, very helpful also to have a very strong civil society out there, and with the publication of more information made available to them, can actually scream murder when they smell that murder is taking place. So I think that's part of what we have to do, strengthen civil society with more information and strengthen parliaments, actually. This is one area that not enough attention has been paid by the international community, I think, especially
to the role of
parliaments in
within
ratifying
a rule of law, yeah.
bad laws, which they
We
can
do
do.
tend to focus on the head of state, but in quite a few countries, the parliament is active and has to be included. Zainab?
I just wanted to add also that it helps if borrowing for infrastructure projects is specific. So we have in Nigeria used some new instruments, new to us. We have used Sukuk bonds to build specific roads. So in that process, you know what the roads are, you know how much is allocated to each road. We also are in the process of looking at some specific infrastructure bonds, and all of this is done openly. So everybody knows and is looking at how the road is progressing. And the funds are directly tied to building those specific roads.
Julie, what's the responsibility of the private sector in helping countries honor their own internal laws and so on?
Well, I think that creditors have an ethical responsibility to make sure that if they're lending, that if they're entering into a certain transaction, that transaction is abiding by the law. So obviously, if you're doing in certain transactions today, which are not as transparent, right? Not the bond market where it's very transparent, but if you're doing a derivative, you're doing some sort of asset-backed lending to provide that government with liquidity, the responsibility is on the creditor to know what those laws are and to make sure that those laws have been followed. So if the law is that you have to go to the parliament and the parliament has to agree on whether or not you're allowed to hedge your gold reserves, then it's upon the creditor to know that.
Touchy question, are there better actors in that process and less good
Well,
actors?
I think we have examples around the world where it has failed, right? So, so that's what we think transparency will drive ethical behavior. So all of those transactions, whether it's a government's debt obligations as it relates to a PPP or an asset-backed or derivatives, those are all things that don't have to be transparent today. We have a certain amount, we have transparency around bonds, but we don't, in the capital markets. Those other transactions, it would be beneficial, our belief is if there was a central repository where that information was required to be reported, housed by somebody, that is independent even of the government, like the World Bank, and then I think that we'll see different behavior from both sides. You asked about whether or not we're concerned as a private sector provider whether there's any risk to a creditor of having that information public. We do not believe so. We think that it's definitely going to drive ethical behavior. If you're acting ethically now, you shouldn't care about whether that information is made public.
But you're a lender to sovereigns.
To sovereigns.
Now, if it's a loan to a private sector, you would think of it differently.
You might think of it differently, but well, it depends. I think that the IIF principles are right now covering private sector to sovereign, right? And we believe
And does that include state-owned? How do you define sovereign?
State-owned enterprises. Sub-sovereign with the state level, because as we've seen in a lot of countries around the world, it's the sub-sovereigns and the states that have gotten themselves into a lot of trouble with debt, and governments have different policies on how to manage that. So we consider it, the sovereign debt, the sub-sovereign debt, as well as the SOEs, and obviously the implicit and explicit guarantees that the sovereign is given. But I think that it's really important that you look at that as if all of that was transparent, we would have different behavior. I think that for some sovereigns, the implementation of those principles may be difficult for certain sovereigns that may have transactions that were done off market and that would have to now be exposed, and that's what we're going to have to manage through in a transition period.
Minister Ahmed, you mentioned states in Nigeria. What about cities? Do they have the authority to borrow, and how do you deal with transparency of city debt, municipal debt?
For Nigeria, it's only the states that can borrow. So
Only states can.
states can borrow, but they can borrow
Are
on
cities-
behalf of their local governments.
Are local governments legal entities within the local law,
Yes, they are.
but they don't have the authority to borrow?
except through the state.
I see.
Yes.
I know other countries, so there are other countries structured that way too. But then what happens when you have a city that might have good fiscal practices and would be bankable, but they're in a state that that doesn't have good practices? How do you distinguish?
So that city will have to borrow through its state. Our laws do not permit cities to borrow. The units of administration is states and the local government. So local government consists of a couple of cities, large and small.
So the World Bank is trying to work in quite a few countries. We are able to work with the state or provincial governments, and in some places with the city government structures, which becomes useful because sometimes one city might have good practices that really are attractive to investment, and another city may not. And so we do have quite sizable city programs in certain countries, such as Brazil. Ken, any thoughts?
Well, I think one important thing going on is that interest rates are so low.
Yeah.
There is this pressure on pension funds, insurance companies to produce results. And across all kinds of lending, there has been pressure towards, I don't know, the phrase covenant light loans and relaxing conditions. Not at Citi, but you know, it's probably growing because that's a very fundamental pressure coming from advanced countries that need to produce results, and they're willing to look the other way. And heck, interest rates are so low, nothing's going to happen anyway, they think. And so I do think it's a very dangerous situation.
Who's responsible? So let's say within a covenant-light kind of condition, is it the responsibility of the borrower or of the lender to try to avoid lowering their standards?
Well, it's certainly the responsibility of the regulators in the advanced economies to have rules around this, and it's hard with all the constant innovation in financial markets.
But who's the regulator in the case of a bank loan to a sovereign? Who's the regulator?
Well, I mean, there's a few regulators, and Julie could probably say better, but the Federal Reserve is certainly one of them. I don't know who the relevant regulator is, but there's certainly an attempt to keep track of this. They say they keep track of it. And of course, it's the responsibility of the country government, the borrowing government, to produce a sustainable debt situation and something that won't have surprises.
But I think from a creditor standpoint, or from an advisor, because obviously a lot of these structures are private placements, right? You're talking about, insurance and pension companies that are maybe willing to go into buy investments that they wouldn't have bought in the past because they're chasing yield. It is the responsibility of the underwriter and the intermediary that's helping structure that transaction to be an advisor to the government that they're representing, that they're actually, this is part of a sustainable debt plan, right? And you want the best data possible because you don't want to be pushing stuff to your investors that doesn't have, that's not sustainable, that might wind up being restructured at some point in time. So I would have to say that those of us who sit in the middle of this process bear a lot of responsibility in terms of how we should be looking at it.
Yeah, that's super. I want to turn a little bit to where we should go from here, and advice if you have any for the World Bank, for the IMF, for the international community. Aaron, how much time do we have? Okay, good. So we can start a new segment. What's the next step in Nigeria? Is there a next phase of this? You mentioned some of the state-owned enterprises are not disclosing, so that would be one kind of step. Are there, in your overall debt relationship, where would you like to see it go?
So where we want to go next is to make sure that we scan the environment and have a good database of all the debts that government owned, whether it's the sovereign or the subnationals, and also the debts of the state-owned enterprises and debts that we owe also to creditors locally. Also, we want to be able to show more clearly debts that are relating to specific projects, like debts that we owe to countries like China for major projects in the country. Right now, they're reported as part of the public debt, but there is no detailed drill down to show that these are the related projects for project borrowing. We have more and more.
Well, I'm sorry, will you explain that? So there's an umbrella debt, and then there's the projects underneath it?
Yes. So we don't have, you won't see now in the debt reports the related projects to that we have taken from major sources like the China Exim loans. We want to be able to also put that in the public domain. There is an increasing demand from civil society and the public in Nigeria for that level of detail.
Ken, where should this effort go?
Well, to target one thing, I mentioned at the outset that the IMF and the World Bank have just taken giant strides in putting together databases. And at this point, with sovereign debt, it's really pretty good. They're trying to add more subnational state-owned enterprises, corporate debt. And I think data is the gold in going forward in the 21st century. It's a huge contribution to be doing this. And it's very helpful to have an international organization do it because they're setting the standards. Here's what you have to report. Here's how other countries are reporting it. And that create for people in the countries that want to have more transparency. They can point to, well, our neighbors are doing this. If we don't do it, we look like we have something to hide. And so I think it's very important to move forward with that process.
Any thoughts on bond debt, bank debt, multilateral debt, any differentiation in thinking on those issues?
I mean, I have a quick answer on that. I mean, the distinction has more been that we have the sovereign debt's gotten pretty good, but there's a lot of other stuff which is also relevant. And it's getting better and better, but it takes a lot of resources to do that. And I also think some leadership of saying, we really want to have this project go forward. Your country's not giving, quietly say, your country's not giving us the data we need. And at some point, again, there's this demonstration effect that if other countries are reporting more, that puts a lot of pressure on you too, because the creditors will say, what do you have to hide?
Jayla, I don't know if she's here, is working on it hard. She's got a big project and people working on this, and we're trying to coordinate with IMF, with IIF, and so on. Antoinette, thank you again for co-chairing IDA. So, one of the things we can do on debt is have more concessional borrowing. One of the challenges that we're facing is there is a non-concessional borrowing policy of the bank that if someone is getting concessional, if they're getting grants, then don't take high interest rate loans on the side. And we're trying to push that forward as a way both of having better development outcomes, but it's also the principle of the thing. Other thoughts on where we should go?
Yeah, no. These issues, of course, are very important in the IDA 19 replenishment, given the large proportion of IDA countries that are either at moderate or high risk of debt distress, and the need to really make sure that this next phase of the IDA replenishment does what it can to help help improve that situation. And, so I think you'll see coming out of the replenishment discussions when they're done, concrete action to take the transparency work forward with country authorities, including in terms of, encouraging more capacity development capacity building support to countries in their management of debt and in the debt reporting and data deficiency issues that are so important. But what I would say, and one thing I worry about, is that of course, country by country situations are very different. So it's important to start with an individual country with a good diagnostic of what is causing these vulnerabilities. And the tendency sometimes to just throw more technical assistance and more training at countries can be worthless, frankly, because there are countries that have received tons of technical assistance sometimes and have very well-trained people in the debt management unit, but the expertise of those people is not being channeled into decision-making on contracting debt. So there is that middle area of, how do you really make sure people who are trained are at the table. It's a tricky place for outsiders, of course, and partners, external partners to work in. But it's really a hugely important one in a number of areas concerning debt. And how do you use leverage of those institutions to help make sure that true institution building is taking place as a result of technical assistance and training. So the effectiveness of capacity building is a huge issue, I think, for the bank going forward, for IDA, and for others as well. And I really think that lots more have to be done also to get countries themselves together to share experiences together among themselves. We know from the Doing Business report that the bank has had for many years that has been a motivating factor in countries wanting to do better than their peers and wanting to improve. And I think the more publication of rankings on debt management issues can encourage more transparency, can encourage countries to want to do better than their peers. So I hope that we can see more of that also going forward. Yeah. The bank has a lot of data already on the DEMPAS, assessing debt management capacity, the CPIA also, that could be made available publicly and could get countries competing with each other on transparency.
Yes, so two things I'll mention. Best practices is one thing that we're trying to see, and I want to keep in mind best practices that get to good development outcomes. So it's not best practices that cost the most money to try to have all data available without a purpose.
Right.
It's to have a purpose that gets us to do good development outcomes, but I think we're pretty far from best practices. So the second point, what we've tried to do in the bank, because as we sized up this project, it kept getting more and more complicated, and the incentives, or the disconnect of the incentives of the various players were there. So we decided to do a diagnostic country, to your point, that different countries have different problems in actually trying to be transparent. And so we decided just to try to do a few countries from the bottom up and try to get a complete kind of diagnostic of ones that wanted to help and work on it, and try to figure out all the different types of debt they have, the different types of covenants that might be in that debt. That's proved to be actually a sizable project just to do for 5 countries or for 8. And then we can use that knowledge in order to figure out what better practices there might be and how do you have more countries engaged in it. Julie, you said transparency drives ethical behavior. So I think we should put an exclamation point on that. Any other thoughts? Where should this project go?
I think that we need to build upon the good work that the World Bank and the IMF has done on this. But as I said, we're very strong believers that the market will create discipline if you put more transparency around the data, and it's not there yet. So we do need to think through the principles of transparency that the IF has put forward, because whether it's PPPs or asset backs or derivatives, there's a whole set of transactions that don't have the same level of information and transparency that the bond market has. And if you get the industry, both the creditors as well as the governments, to agree that maybe the World Bank should be adding that to their sovereign debt, then you have the full picture. And once we have the full picture, and it's the same conversation we have with clients, with sovereigns that we privately advise, and say we need transparency. Our goal is debt sustainability. We get that governments have short-term objectives and long-term objectives that they're constantly trying to manage, and there are tensions there. Our goal is to help them manage through that. And that's why all these other instruments exist. And there are definitively good purposes for these other instruments other than the bonds. But we should be transparent about it so that you let the market and everybody in the market see full visibility. And then you can say, you know what? They have these 5 things that we really didn't understand the terms of, and when we look at those terms, they shouldn't be taking on any more debt because they're going to get themselves in trouble. So
I have a touchy question. So
Yeah.
do you handle just developing countries or global?
Global.
And so do you have that same conversation with developed countries? And do you want to name any names?
Well, the developed countries aren't usually asking us to help them with their debt strategies and their debt sustainability. They're not usually.
But are they
sources for advice.
transparent? Are developed countries transparent in their debt practices?
Well, more developed countries. I think more developed countries. I don't know the answer to that specifically. I think more developed countries are. The more developed a country is, the more they rely on the capital markets for funding themselves, right?
But is that by definition transparency? If there's disclosure in a public debt offering,
yeah.
Does that meet disclosure transparency standards?
Yes, and that's why in the IAF principles we're not asking to layer anything onto the bond market because we consider the bond market completely transparent already, right? And we don't want to add any more burdensome reporting as it relates to that.
Ken, any thoughts on that? And then
Yeah.
I'm going to finish with
Yeah, I mean, certainly there are questions going forward, for example, with public pension funds, which you mentioned, where I would say there's a lot of constructive ambiguity in what's going to go on, what's going to happen when they can't pay the pension funds. Are they going to renegotiate it? Are they going to default on the bonds? And we don't have the experience, but there's some big questions for advanced economies if slow growth continues, demographics remain adverse.
I was thinking more of the sovereign itself, like the U.S. government, not a pension fund.
Well, no, but I mean, take the example of Illinois,
Yes.
which can't pay its pensions, and does
yes.
that mean they're going to default on their debt?
And then the states.
And we have Medicare and Social Security, and we don't default in the same way. But if we've made promises, can we really take them back? And the promises could get much bigger soon. And what happens if we take them back? What do we do? I think there are a lot of unanswered questions.
There's a lot of complexity in the pension market that's different than sovereign, pure sovereign debt.
But they're not unrelated.
Yeah, no, they're not unrelated. I agree.
That's
I
an
just
issue.
a little bit beyond.
all good, and I'll connect it to development in developing countries. We need a strong developed country sector and growth in order to help be a platform for growth in developing countries as well. So it all does connect. But you get the last words on thoughts on where this should all go. Is it constructive? Will it help Nigeria? What's the outlook?
Well, 3 things, Mr. Malpers, for Nigeria. 1, we have tried to become more transparent in our debt, and we're making progress. 2, we know that there are some challenges because we have not been able to scan the environment and capture everything. And we're working closely with the World Bank and the IMF to take stock. But 3, we have to now make an assessment of when we scan the environment and get this debt, what will be the impact for us? How do we best handle that? Because some of the challenges, the gaps that we have, they're very, very old and they go way back, and they could be liabilities that when they crystallize will end up on the balance sheet of government. So we have to ask for support to look at how best to handle reporting them, and what will be the impact at the end of the day on our total debt profile?
Fabulous. We're at, now what does wrap up mean? That means I don't know that I have, so my wrap up, we talked about transparency helps ethical behavior and outcomes. This is important in achieving good growth in developing countries. It's a really complex area because I mean, for several reasons. One, Ken named, with interest rates low and bond yields low, the crossover point of what's a fair debt contract and what's a useful investment coming out of it is made extra complicated because, I mean, the one way I think about it is, I mentioned the discount rates before. It used to be that interest rates were kind of high, and that coincided with the discount rate of the people in the country. But now we have interest rates really low. So if I'm a government, the temptation is get all the money I can now, have some projects, and then over time that's going to be paid at that lower interest rate that's been negotiated. So I don't know where that all goes. I mean, my bottom line is transparency is really important in this because then you've got some chance of having some market discipline and some public discipline on the outcome. Any last word, Antoinette?
I'd only say that, very, very good first steps with the IIF principles, the G20 principles, and the self-assessment that we see happening. But it's work in progress. And the beef is now in really fully implementing those. And actually, it's a voluntary thing in the case of the private sector and IIF. And how does one put a spotlight on those who are not complying or not volunteering to offer data, I think will be an important thing to take forward. And likewise, there's some mixed record of information reporting and sharing already in the G20 context. And I think that also needs to be something one works on. I talked a lot about the countries and what they needed to do in the IFIs, but I also did want to say a little bit about private sector.
It's no small feat to implement. Right? And so we're going to have to have an industry commitment both from the private sector and the public sector to work forward to get the principles. And I think if we can get there, it covers 80%, but then we have to address the first thing that you brought up, which is it doesn't cover sovereign to sovereign debt, which is another category that we don't really know exactly the size of.
Super. Well, thank you, everybody. This was very interesting discussion. Thank you to all of you.
Thanks.